Hey y'all, Cam Walker, Texas agent here. As most of you have probably figured out, I'm a real estate agent. But did you also know I'm an insurance agent? That's the name, Cam Walker, Texas agent. Real estate, insurance, you know, it all works. Anyway, I thought we would spend today talking about the basics of homeowners insurance. Now, whether you are a first-time home buyer or this is your 4th, 5th, 12th house, it's always good to understand what it is that you're purchasing to protect your family and probably your most expensive possession you own. When you look at an insurance quote or an insurance policy, one of the first lines you're going to see is dwelling coverage. This is the amount that's there to cover the main structure of the house and anything attached to it. So attached garages, wood decks that might be off the back porch, anything attached is going to fall under dwelling. The next line you usually see is other structures. These are the things that are not attached. So say you have a pergola out back with a fire pit and stuff underneath it. The pergola is not attached, so it falls under other structures. The fence around your property, if you have a storage shed, if your garage is detached from the house, that's going to fall under other structures, not dwelling. Say a tornado came through and knocked everything out. Those two numbers combined are what's going to be there to rebuild your house, your garage, your pergola, replace your shed. The dwelling coverage is usually figured out using what we call is a replacement cost tool. That's where an insurance agent should be going in and asking you all those important questions. What kind of flooring do you have? Do you have a fireplace? How many bathrooms are there? Is your kitchen a builder's grade? Is it a semi-custom? Is it a designer kitchen? What are the outside walls? Are they rock, brick, stucco, hardy plank? Do you have a shingle roof? Do you have a metal roof? All of those details go into what we call the replacement cost tool to figure out if it was a total loss, what would it take to rebuild your house from the ground up? The replacement cost tool is a great starting point to figuring out your dwelling coverage. But we also have to work with the mortgage company because we have to make sure in most cases that we cover the loan amount. Replacement cost may come back at $295,000, but the loan amount might be $305,000. That mortgage company is going to want to make sure that we cover that full amount in most cases. Now here in the hill country, if you bought some acreage with a house on it, we may not be covering the full loan amount, and most mortgage companies understand that because we don't need to insure the acreage. It's not going to go anywhere. We just need to insure the structure. And that's where we use the replacement cost tool and probably the appraisal results to go back to the mortgage company and go, look, they have a loan for $500,000, but the house is only worth about $250,000 to $275,000 of that. So let's do insurance for $275,000 instead of the $500,000. The next important piece on a homeowner's insurance policy is your personal property protection. This is what I like to explain as if I could take your house and I could pick it up and flip it upside down and shake it, everything that falls out of the house is covered under personal property. That's gonna be your silverware, your dishes, your couches, your rugs, your refrigerator, your clothes, your shoes, your jewelry, anything that falls out. That number can add up if you really think about it and walk through their house and go, yep. Oh, it adds up. So you wanna make sure you have enough coverage there. But you also have to consider some of those items like jewelry. Depending on your policy, you'd have to check on what you have or what you're looking at with the particular insurance company you're talking to. Some of them have a limit on jewelry items. They may say, we'll replace those 5 pieces of jewelry, but we're not replacing anything more than $1,000 per piece. So if you have a Rolex watch or a really nice wedding set that are worth more than what that line item per jewelry item is, you might want to consider doing what we call a scheduled personal property on the policy or get a personal articles floater policy. The next thing to talk about on the policy is your liability limit. This is what's there to protect you and your family in the event of somebody getting hurt on your property and suing you, or say your detached carport happens to falls on the neighbor's fence, the neighbor's car, the neighbor's house. Those things are going to be covered under that liability limit. This can be anything from, I've seen as low as $25,000, I've seen as high as $1 million. You have a swimming pool or a trampoline, you might want it a little higher. Just kind of depends, but something to talk about because that's there to protect you and your family. Underneath that one, you usually see guest medical. That's gonna be a smaller number, probably 1,000, 5,000. Those are for those little things. The neighbor is over playing with your daughter, trips, falls, gets some stitches in her cheek, and you wanna help cover the expense of those stitches. Guest medical is there to help with that. When you're working with your insurance agent and you're trying to finalize the policy and figure out exactly what it's gonna be, one of the things that you're going to have to decide is what kind of deductible do you want? This is your portion you're gonna pay when a claim is filed. Say you have a fire in your kitchen. It's estimated to be a $10,000 repair, and you chose a $2,000 deductible. That means that you're gonna pay $2,000, the insurance company is gonna pay the other $8,000. It is your portion that you are paying. Of course, the higher the deductible, the lower the premium. So it's something to consider. So while we're on the topic of claims, you pay your part, insurance company pays their part, but that's not all there is. If this claim causes your house to be uninhabitable, you can't live there, there's a line item usually on the policy, might say something like additional living expenses. This is a bucket of money the insurance company has to put you up in a hotel or somewhere else while the repairs are done. For me, for instance, my family and I had to move out of a house for a week while some repairs were done because the water had to be cut off. The policy covered for me, my family, and my dogs even to stay in a hotel for a week. And then I had to keep track of what I normally spend on groceries for a week versus what I spent having to go out to eat for every meal. And they covered the difference in that. Now, every house is unique, as you know. I've shown a lot of houses and I know all of them are different. But a couple of scenarios to think about. If you have a trampoline, is it gonna be covered by insurance? Maybe, maybe not. Every policy is different. Swimming pools. It's not a black and white answer. It's something that you really need to talk to your agent about. Storage units. You may have just sold one house and you're downsizing because you just bought a smaller house and you got to put some things in storage. Are they covered? Typically it's a 10% rule. If you have $100,000 in personal property on your dwelling, 10% of that is $10,000. You've got $10,000 in coverage for what's in storage. Some of the companies let you change that, some of them don't. Talk to your insurance agent. Now, you're a first-time home buyer and you're still trying to wrap your head around all of this. Who pays the insurance policy? Do I call an agent and do I pay for it? Typically, that policy is gonna be paid for at closing. That's gonna be part of what the title company collects, and they will send a check to the insurance company to pay for the first year. Now, years after that, you probably are going to escrow your insurance and your taxes. That means your house payment is gonna cover principal, interest, taxes, and insurance, PITI. Say your insurance is $1,200 a year, part of your house payment, about $100, they usually add a little bit more for buffer. So say you've got $110 out of every house payment is going into an account to save up for the next year's home premium. So you bought a house, they're gonna notify the insurance company you're buying it because they're gonna need proof of insurance and they're gonna take care of the payment. But just a little caveat from the insurance agent and me, if you're the one selling the house, the title companies, the mortgage company, they don't tell us. So if you sell your house, make sure you call your insurance agent and let them know that, hey, I just sold my house, I just closed on it. That way we can cancel the policy. Can't tell you how many times I've had clients call me, they get the renewal in the mail, and they call me and go, we sold that house 5 months ago. Did nobody tell you? No, nobody told us. If you don't call your insurance agent to tell them you sold the house, they're not gonna know. So make sure you call them. Add that to your list of things to do when you sell a house. The best advice I can give you, if you have questions about your specific policy, your specific quote that you're looking at, ask the insurance agent that you're working with. They should be ready and willing to answer your questions and help explain so that you understand what you're purchasing. As an insurance agent, I love doing that for my clients. As a real estate agent, I bring that knowledge to my buyers and my sellers. It's just something I enjoy. I'm a teacher at heart. If you have any further questions, feel free to comment below and I'll answer you there, or you can call me, or you can email me. You can even text me, and I'll do my best to answer every question as soon as they come in. I'm here to help. Feel free to reach out, and until I see you guys again, have a wonderful week.